In this morning's U.S. Bank Economic 360, we're going to talk about the price of gold. Does the price make it a good time to buy gold? Is gold a good investment? U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman joins us now to help figure this out. Mike, good to have you with us.
Good morning.
We've heard a lot about gold recently. What has the price done so far this year?
Sure. Well, unfortunately, it's been in the news mostly because the price has been falling and fairly sharply. If we think back, say, 20 years, the price of gold traded fairly consistently for quite a while between, say, $200 and $400 an ounce. And then just 6 or 7 years ago, it really gained some momentum and had quite an extraordinary rise up to about $1,900 per ounce back in 2011. But since that peak, it's been trending mostly downward, and unfortunately, it's been a fairly dismal 2013. Gold has lost about 20% of its value so far just this year.
What are some of the factors behind this rather dramatic fall in prices?
Sure. Well, the price of gold, as with any asset, determined by many things. But historically, two key components to that have been fears about inflation and some sort of economic crisis. So unfortunately for gold, we've had really neither so far this year. Gold very much viewed as a safe haven by investors. So with inflation low and not any crisis to speak of, it's not been something that would propel gold higher. I mean, just to look at the crisis side, the peak of gold came back in late 2011 when we had the budget impasse and the downgrade of U.S. Treasuries. By comparison, the sequester and the fiscal cliff have been non-events. So there's not really anything pushing investors to flee towards gold, especially with the stock market doing as well as it has.
Yeah, you see gold as a safe haven, and these days it doesn't look like we need a safe haven, at least not for the moment. What would cause the price to rebound?
Sure. Well, on the inflation side, really, I think in the near term, we're not going to see a significant spike there. So that's not likely to be a factor. On the other hand, some sort of global geopolitical or economic crisis could always be around the corner. The North Korean situation could always escalate. Certainly we're not past the budget battles here in the U.S. So, anything that were to cause some turmoil would cause investors to seek a safe haven. Naturally, too, if the stock market were to correct in a significant fashion, that would cause investors to look elsewhere also. So it remains to be seen, but there's always something that seems to crop up to cause investors to flee for safety.
We'll see if there is another golden opportunity around the corner,
Sure.
Mike. Thank you. We appreciate you and U.S. Bank.
Thanks.